Welcome one and all to this session on cryptocurrency and fintech, opportunities and challenges. This is really digging into the fundamentals of cryptocurrency and a dive into the regulation of crypto and digital assets. So I'm absolutely looking forward to this. I hope you are too. This is going to be a good time. There's so much happening in this space right now that it's fantastic, honestly, to see. So today we have Eugene Giudice, as well as Eric Berman and myself. And so we're going to go through each and every aspect of this. I'm looking forward to it. And let's start talking about the agenda. So first, I'm going to go through cryptocurrency fundamentals. Then we're going to hear from Eric, who will be on the line. He's listening right now. Hey, Eric. And he's going to go through the regulation of cryptocurrency and digital assets in the United States. And then we're going to get to questions. So Eugene will help us guide us through the questions that come in from you. So we encourage you all to send in questions as they come to mind, and we will address them at the end. So here we go. Quickly, I am Joe Raczynski at Thomson Reuters. I'm sort of a technologist and futurist, basically going through a lot of the things that are happening around the world today as it comes to technology and its intersection of the legal industry. So one thing I've been involved with for quite some time is the cryptocurrency world going back to 2011. So that's a little bit about me. Now let's get into the meat of this as we start to talk about this. So what I really like to do is talk about the history of blockchain leading into cryptocurrency, because this is fundamentally where it all starts. The history, where did we actually start? Why is this even coming into existence? Well, think back to 2008, 2009, we had a small financial crisis, and we saw the biggest banks in the world who've been in business for 120, 130 years going under. And we're just befuddled. What in the world is happening? And we saw these single points of failure. So they were a bank that basically ultimately controlled where money was being sent back and forth, right? So this is where it gets a little bizarre. So you see this white paper over on the right-hand side. It's all of 10 or 11 pages long. And to this day, we still do not know who wrote it. It's known by Satoshi Nakamoto. And it could be an individual, a man, a woman, a group of people came together and they said, let's write this white paper. And why are we writing this white paper? Well, we see this financial crisis, and we see that there are single points of failure. So what can we do to change the entire paradigm? And so what they came up with was this idea of a decentralized network. So instead of having that one bank ultimately deciding that money is being sent from one person to the other, let's have 10,000 computers all running the same software around the world that basically have to solve mathematical problems to confirm that a transaction is being sent from one person to another. So it's not using human interaction, it's using an aggregate of computers that have to verify that a transaction happened. This, I know, is kind of wacky in some respects. So of all things, Bitcoin started this, and the underlying technology behind that is blockchain. And so when you hear that word, blockchain, think about a database. That's really quite simply what it is. It gets much more involved in that, but it's a database that's distributed. So what's so special about this and what launched this whole cryptocurrency world is that in the Bitcoin example, it's a peer-to-peer electronic cash transfer, which means there's no central banking authority at all. What we're used to for hundreds and hundreds and hundreds of years, that no longer needs to happen in this world, right? So it relies on cryptography that's been around since the 80s. So the same sort of cryptography that's been used for banks since for forever, right? Those computers, those nodes, the same sorts of things are all running the same software. And they're agreeing that these transactions have happened or they're not happening. And so it kicks them out. So fundamentally, that's what we're talking about. So Bitcoin is the first example of this. And sometimes I go down the path of blockchain more because it has a much bigger role to play in the legal world as well as every single industry out there. But today, for the focus, we're going to go into the cryptocurrency world, and Bitcoin is the first one out there. So how does this work? What I'm going to draw your attention to is a transaction. So Eric and I want to engage in transaction. Let's pretend Eric has a Bitcoin, and I know he's got hundreds and hundreds of them. Wink, wink. We all hope that we would, right? So Eric has one Bitcoin that he wants to send to me. So he has a digital wallet address, and I'll show you what it looks like maybe in a future slide. It's a gobbledygook bunch of numbers and letters that represents a unique digital wallet address that's his. He has ownership of that. I also have a unique set of numbers and letters that represent my digital wallet. So Eric wants to send me a Bitcoin. So what does he do? Well, he can use an app on his phone. He can use something on an app on his computer. And all he needs to do is say, okay, here's Joe's address. Now, how much do I want to send him today? I'm going to send him one Bitcoin worth whatever, $30,000 roughly today. Thanks, Eric. So then he puts that in there and he clicks send. So what happens? It broadcasts to the network. The network first looks, okay, does Eric have one Bitcoin in his wallet? Okay, does Joe actually have a wallet address? They confirm that happens, and it's broadcast to a grouping of a subset of those 10,000 computers. And it says, yes, okay, let's get this out. This works. It broadcasts it. It says, okay, yes, this happens. And then when the transaction actually consummates, then it adds it to the blockchain. So it adds it to that database permanently, immutable. So it's up there permanently, which has its both positives and negatives. We won't go into that today. That's in general how that transaction works. So if I wanted to, or if Eric wanted to, he could send money to anybody around the world. It should take about 20 minutes. Sometimes it's faster, sometimes it's slower. But it bypasses the banks, bypasses government regulation for the most part. There's some nuances that I'm sure Eric will get into in the future as he gets into that part. But that's the crux of what we're talking about in terms of Bitcoin, the original cryptocurrency. There's now over, let's say, 11 or 12,000 cryptocurrencies out there, and there's going to be millions of these types of assets in the not too distant future. Okay. So where did this all begin? Well, we know it began with Bitcoin first, but where did it start taking notice? So when people really were like, all right, so what's going on? Why is this a thing? It went beyond what Bitcoin is doing, and that is the token sales. So let me talk about the token sales that happened back in 2014 all the way up to 2017. They're still happening, but at a different rate. What you'll see on your screen in this video is on the x-axis, essentially time, clearly. And then what you'll start to see are these bubbles that start coming up. And these are organizations. They're sometimes companies, sometimes nonprofits that are raising money through an ICO. ICO stands for Initial Coin Offering. Sounds like IPO, right? Initial Public Offering. But this is something entirely different. Semi-regulated back then or not regulated back then. Now there's guidance, and Eric will of course talk about this, I'm sure, but you'll see how it just balloons into this exponential effect around how much money people were able to raise quickly through this new mechanism to do so using this tokenized economy. Watch it take off. You start to see it happens in Europe and North America and Asia and the Caribbean, all over the place. And this only goes to 2018. We're talking about billions and billions of dollars raised using this model. That's why the world started leaning into this and the regulators started looking at it. But let me talk to you about how this works and how this really starts to take place. So the ICO process is initial coin offering, as I mentioned before, a way to raise money for startups. Now, I've built 2 cryptocurrencies way back in 2017, just for the heck of it. But for clarity, I never sold them because that's where you start to get to the point of not a great idea unless you have, all the financial guidance, all the legal guidance you would need for that sort of thing, which I'm sure we'll hear a little bit about later. So this is how people would raise money. It's simple. Any one of you could do this hypothetically. You open up a website, and the website basically says, this is what we do. This is what our company does. You have a purpose, you write the white paper, you create a timeline a timeline for when people can come to your website and they can donate funds to you, and that's a quote unquote. So you open up this white paper and it says, Eric has this great company and he's doing this and this, and he wants people to come to his website and basically and donate money. So what would you donate? Well, you would donate cryptocurrency. So maybe you would donate Bitcoin or Ethereum, which is the second biggest one out there, so Ether. And in exchange for me coming there and giving my Bitcoin to Eric, he's going to come back and give you 10,000 Eric coins. And you're like, what can I do with 10,000 Eric coins? That's pretty cool, but what am I going to do with that? Back then, I could take those digital tokens and I could put them in my digital wallet, and that's stored on the blockchain. So it's safe, it's secure, it's using a smart contract. So there's not a human being saying, okay, now Joe has these 10,000 Eric coins, but they're in this digital wallet. They're stored on the blockchain. We're good to go. What's cool about that is that you now have these stored in your wallet and you can port them over. So you can take them over to an exchange. And then way back when, that's when things took off. So companies that had tangible, hopefully, assets or things that they wanted to do, they took off. So maybe I bought each one of those tokens for 10 cents each. You saw that double to 20 cents, sometimes $1, sometimes $10. So the original investment that I made could have gone up immeasurably, like off the charts. So we saw this bubble and we saw this crash. So that's the essence of what we're talking about. So the users were given these tokens. So Eric gave me these 10,000 tokens. I could then take them over to an exchange. It was a donation to try to skirt some sort of regulations around that. So that's the essence of what we're talking about. So the whole ICO thing is sort of faded, but it's still available and there's still ways of doing that. Now, I talked about a smart contract, and this is one of the most important and seminal components of blockchain in my personal opinion, especially when it comes to Ethereum, which is the second biggest blockchain that's out there. And the reason why I think it's so important is because it's going to affect the way that people practice, the way that people interact with commerce going forward. So let me explain something that I sort of developed, I guess, 5 years ago at this point in time. This is my example. So you have been asked, and you're probably maybe in the financial sector, maybe you're a fintech lawyer, or whatever the case is, and a relative asks you to draw up a will. You're like, I don't do wills. Yes, I'm an attorney, but I don't do wills. I specialize in something else. But you're like, you know what? I'll do it for you. So you break open Word, maybe drafting a system, whatever the case is, and you draw up the will. And this is what the will says. It says, you have the parents. They have 2 kids. Upon the parents' death, both kids have to be married in order to split the estate 50-50. If one kid is married and one kid is not, the kid that's married gets 100% of the assets. Preposterous, I know. And so it's drawn up, it's, all these pieces are pulled together, it's put into a PDF, it's notarized, you're good to go. That's how you would normally say, all right, the will is done. This is where you're going to see the change. So the interaction between the smart contract and the blockchain, that will is now codified. So it's turned into something like this. I'm not expecting any one of you to read through the code, but I'll walk you through it. There's a little bit of code on the blockchain that looks for parameters that change. So in the first example, what it's doing is it's looking at the will and saying, okay, what's the first thing that the will needs to look at? The computer's like, what do I need to look at? And it's looking at whether or not the parents are alive. So every single day, the computer reaches out through an API call, computer to computer call, to determine whether or not the parents are alive. For years and years and years, they're alive. Then unfortunately it comes back and both have passed. Heartless, the computer goes on to the next task. The next task is verifying that both kids are married. So it then reaches out again through to a trusted source called an oracle and says, are both kids married? It comes back and says, one kid is married, one is not. For the sake of argument here, for simplicity, the assets are liquid and it transfers all the assets to the kid that is married. This whole right-hand side is automated. Now, I know that each and every one of you could poke holes through this, and yes, you can, but this is a smart contract. These are being built right now They're a little more simplistic, but this is a direction that we will start to see things move in. So when we hear about cryptocurrencies and we hear about smart contracts, a lot of this stuff is going to be interchangeable. And so I thought that it was important to mention what a smart contract is as it sits within the cryptocurrency world. So this is a list of the top 10 cryptocurrencies that are out there. Some are currencies, some are tokens. Eric will go into some of this. I'll touch on it very quickly, but they're just different projects. So Bitcoin is a currency, and it really is trying to be just something similar to the US dollar, maybe the euro, maybe the yen. But then there's other projects out there that are considered tokens. So Ethereum is that, and we'll briefly touch on that right here. So currency is, of course, like what we just talked about, Bitcoin. And then Ethereum, the token, just to very quickly highlight this, is that while it has value, so the Ether has value in terms of the US dollar or all the other currencies out there, what it does is it performs something. So when we hear about people using the Ethereum blockchain, so you're saving something to that, so you want to save that will to that blockchain, because you want it to be safe, secure, immutable. You could do so, but you have to pay a token to put it up there, to save it to that database. So that's what Ethereum does, is it allows you to save to their database using their token. So you might have to pay like 20 cents. Well, it used to be 20 cents, now it's a little higher, but 20 cents to save that to that particular database. So that's the difference between a currency and a token in that space. So how to invest. Now, when we were talking about this before with Eric and Eugene, one of the things that people wanted to call out was, how do you even go about this? Like, if you've never interacted and never gotten any cryptocurrency, what would you do to do so? How would you go about getting that? Well, the way that I like to describe it is simply this. If you have a Fidelity account, you have a Charles Schwab account, or TD Trade, whatever, any one of those accounts, it's almost like that in many respects, in that you fund that account with your dollars, maybe in Europe, so you have your euro, your British pound, or whatever the case is, you're funding that. So you're porting over that money, you're sending it over to that account. And then at that point in time, you're able to buy these cryptocurrencies. Like I said, there's 12,000 different cryptocurrencies out there. Coinbase is one of the biggest exchanges for cryptocurrencies that we have in the United States. There are many. Kraken is another one. Binance is a US outpost, but it's really based in Asia for the most part. There are at least 175 other cryptocurrency exchanges out there. These are centralized. We are not even going to go into the DEX or the decentralized exchanges, but suffice to say, if you've ever used decentralized anything, be it torrents, it's like that. So it's a totally different world. Again, not going to go down that road. Let's focus on the task at hand, which is, if you were to buy Bitcoin, how would you go about doing that? So you've opened up your account on Coinbase. You basically fill out some basic information. There's a lot of KYC, so know your customer, which is very important. In fact, there's probably some more KYC in this verification than some of the accounts that I've opened up in the United States for banks with some stuff. They want you to take a picture and sometimes even a video of yourself to prove your identity. Okay, once that's done and you're in the clear, then you get to a section where saying, you know what? Okay, I have so much money that I've decided to bring over. Let's say it's $1,000 that I've decided to port over to my Coinbase account. And then what you're able to do is you're buying it or you're selling. So in this instance, we're going to buy some Bitcoin, but you could buy some Bitcoin Cash, some Ethereum. It tells you what the value is of that Bitcoin. One quick thing to note: you do not have to buy a single unit of any one of these. You can buy a finite percentage of that. So there's 18 decimal points out. So we think about the dollars and cents. We have 2 decimal points. Imagine point and then 18 points out. That's how small you can get these things. So in this instance, the individual decided to use their Visa, and they're decided to use $200. So they want to buy $200 of US currency, and this is how much Bitcoin they're going to get from that. And then you simply buy it immediately. You could see you get that money, the Bitcoin over here. Per Bitcoin, it's 13,000 whatever dollars US is what you're paying, essentially. and prorated, of course. So that's how that works. And it ends up going into your account. So you're basically paying $200. There's a service fee on Coinbase. So some people decided not to go this road because it's a little more expensive, perhaps, but that's a way of doing it. Fundamentally, you would have different wallets that sit inside of this. It's your portfolio. So you have a Bitcoin Cash, Ethereum. Each one of these could potentially have a different wallet address so that people could send that to you. So once you have this, you can actually send it to somebody else. You can pay for services. You could then take this money and you could fund that Eric coin that we were talking about earlier on his ICO, right? So that's what you can do with these types of things. All right, for the sake of time, there's a few more things I'm going to go through. First thing is DeFi. So what we have seen is cryptocurrency have taken off exponentially. A lot of people got into it. It did this huge bubble and then it popped and then it started moving back up again. This next phase, now I would say this is the second of 3 phases that we're in. This is the second one. So why is it really taking off now? This is why. And I take a big pause here. I know there are multiple people from the financial world that are listening in, and you are probably very aware of this, but for those of you that may be less aware, DeFi stands for decentralized finance. And this is the pause I'm going to make. The theory is that pretty much everything that we see in the financial world right now could be decentralized, which means that there are investment tools out there that are actually active, that are working right now, that have replicated everything you currently see in the financial world. That includes loans, all sorts of investment, the exchanges themselves, the derivatives, prediction markets. All of that can be ported over to this new world if people have decided to go down this road. These are functioning right now. There's clearly a lot of conflict about where regulation sits around the world in the United States, and Eric's going to go through, I'm sure, some of that or touch on it at least a little bit. So there's clearly legal impact. I mean, we're talking about new financial systems, disruptors to banks, access for everyone. That's one of the coolest things about this. So there are parts of the world where 90% of the people do not have access to banks. So why not have them have a digital wallet that they have control over all of their assets? And I'm not just talking about money, but I'm talking about everything. And we'll go into that in just a second. All right. So one thing that we want to talk about, this is the third phase that will lead us into some bizarre stuff. So NFTs stand for non-fungible tokens. The reason why I bring this up is because this is the direction that we're going to start to see things move in a little bit. This little piece of art is one of 10,000 unique pieces of art that came about in 2017. I know it is as ugly as can be, and it's pixelated on purpose, but each one of these 10,000 is unique. It's called a CryptoPunk. And in 2017, anybody who wanted one could claim one. You would literally go to the address of the person that had them, claim it, saying, I want this. It's then put into your digital wallet. But now these things are selling for $100,000. Jack Dorsey sold his original tweet for $2.5 million. You might be like, well, how could he sell his original tweet? I can just go to that any day. Yes, but you can now put that onto the blockchain and take ownership of that. So the next person that now owns this can get royalties. Anytime this is used, like this one, the person could get royalties on that. All art can be put onto that. All music can be put into this space. This was whatever, one Beeple sold all of his art for roughly $70 million. And if you want to look at that, basically non-fungible token is a unique identifier for something. It could be a real estate deed. It could be tons of things. Tokenization of all assets is here. So we're talking about real estate. We're talking about currencies, commodities, small businesses. So all of that stuff can now be tokenized, can be put into a wallet. And this has massive impacts on all sorts of things going forward. Eric's going to talk about this, but I really wanted to bring this up because this is something, as we know, started in 2009 with Bitcoin has now moved into 83 countries around the world looking at CBDCs, so central bank digital currencies, so digital wallets. It's unbelievable to see how much has changed so quickly in this space. So new financial systems, disruptor to banks possibly, and access for everyone. In closing, what the one things that I want to bring up is there are infinite use cases for digital currencies and the tokenization of all assets. Some quick ones. IPFS, Interplanetary File System. This is a disruptor, a potential disruptor for clouds, cloud service providers like Amazon, Azure, so Microsoft, because anybody who has a computer around the world, let's say there's 25 billion computers around the world, anyone who wants to opt into that can rent out space on their hard drive or rent out processing speed. And it's encrypted. No one can see it. It's taken care of in the cloud, but you get paid for that. And so that's by magnification, way larger than any of those other cloud providers. As we talked about, decentralized exchanges, prediction markets, identity markets, stable coins, which we'll hear a little bit more about, loans, securities and securitized tokens, social networking. All of these will shift to a decentralized model, which are using various cryptocurrencies to help in all of this. And I know this was extraordinarily quick, but this is something I just wanted to touch on. Normally I spend an hour or 2 hours going through this, but wanted to give you an idea of some of these things.